and only then, do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. And the pipeline overflowing, I don't drip or spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird in the strap, say the word and she handle that.
Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know.
Welcome, guys. Let me know where you guys are from. We got somebody from New Jersey, somebody from Boise, Idaho. Let me know where you're from in the chat. If you heard me.
Meet Asana, a work management platform that helps companies get more done and save more time.
Jerry, you want to take? Yeah, let me guys know where you're from, and if I can see your beautiful faces, that would be awesome as well, so I don't feel like I'm talking to a blank screen. Did you take over Tampa, Florida? We'll be soon.
There we go.
All right. Hello, everyone. Welcome to our Wednesday night Multifamily Freedom Chasers debt financing Zoom call. My name is Shelly Miles. I'm a commercial mortgage broker and a co-founder of our brokerage company called Adventure Commercial Capital, together with Mr. Jerry Miles over there. Wave for those of you who do not know him. What our company does is connect real estate investors like yourself to lenders. With that, I'm going to hand it off to Mr. Jerry Miles. Actually, I'm going to say this part first. We connect investors that want to buy multifamilies, fix and flip storage units, hotels, and businesses that has real estate attached to it. Because each investor is unique and each deal is unique, we have the skill to connect you to the right lender. Before I hand you off to Jerry, if you are new, I see some new names on here. Put a 1 in the chat so we can welcome you, and we hope we can add some value to you and to your real estate journey. Jerry, you want to go ahead and take over?
Yep, I will.
All
Welcome,
right,
everyone.
Eric. We have Eric. He's new. Hi.
Awesome.
Anita. Lance.
There's quite a few new names.
Yeah. Welcome, guys. Hope we can add some value to you. Jerry, you want to go ahead and take over? I'll do the admitting. Don't worry about it.
All righty. All right. So welcome, everybody. My name is Jerry Miles, and go through a little bit here. We usually go an hour on these calls. We have been doing these calls, how long now? About a year and a half, coming up on 2 years.
Yes.
We've been doing these every other Wednesday. So, but today's agenda, we'll go through the community ecosystem. You'll see the name Multifamily Freedom Chasers. We are part of the leadership team of the Multifamily Freedom Chasers. That is not our company. Our company is Adventure Commercial Capital, but we are part of the leadership team for the Multifamily Freedom Chasers. So I'll tell you a little bit more about them as we get going here. But we'll talk about the community ecosystem. We'll do some introductions. We'll let a few of you that want to introduce yourselves. We'll talk about the current debt market and things that are going on there. And then our main topic, we'll be talking about DSCR and DSCR loans. What is DSCR? And then also what is the DSCR loan product? So we'll be going over those things, and then we'll have a question and answer time at the end. So the community ecosystem, the Multifamily Freedom Chasers, was founded by these three gentlemen all the way on the left of your screen. They met, and they're working professionals. They we have an engineer or two engineers in the mix and a physician in the mix. They decided that they wanted to start the multifamily freedom chasing journey, and through that they got together and they started this community about 2 years ago. Shortly after, they invited us to come along and be the finance experts of the group. I believe the group now, I mean, we've got several thousand in the group on the Facebook page, and probably several thousand on the WhatsApp group and things as well now. We'll give you guys a chance to join the Facebook page and the WhatsApp group and all those things as we go. But through the community, we do educational Zooms. We have alternating Mondays. Every Monday we have a Zoom, and we have what's called an activation Zoom, where we'll have a celebrity investor of some sorts that is on that call every other Monday. And on the alternating Mondays, we do asset management with BB and Iffy, and them two, they're rock stars. They've been buying. I think in the last several months, they've bought 3 different properties, multifamily properties. They're killing it and doing well. The alternating Wednesdays, you have myself and my wife talking about the financing end. And on the off Wednesdays from our calls, we have Ed and Kevin. They are active investors themselves. They just bought 120 something units in Destin and are working on another deal in the Panhandle area as we speak. But they are also both commercial brokers, so they can help you buy and sell these things as well. So through this group, we're all of us are full-time real estate, either investors or work in the real estate space, and these Zooms are free. So plug into the community, enjoy the content. We've been a part of a lot of different masterminds and things, my wife and I have, and the content and things that we put out here on this call for free is better than some of the courses and things that I've seen that we've paid as much as $40,000 a year for real estate education, and the education you'll get in here is just as good or better than what you'll pay all that money for. So plug into the community, be a part of it, is all I can say about that.
I just shared the Facebook link in the chat. You guys can grab that if you're not part of the Facebook community. A bunch of people just joined in. If you're new, put a 1 in the chat so we can say hi to you and welcome you. And go ahead and join the Facebook page. You can get all the updates and all the links to each one of those Zoom calls Jerry was talking about.
Awesome. And these are all the different places that you can plug into the Multifamily Freedom Chasers community. We're on YouTube. All of our calls that we've done over the last year and a half are all on YouTube on the page. So if you are just looking for some extra bonus education, you can always get on there and get any of those. And that goes for all of the different, all the different calls they're all on the YouTube page. We're on Instagram, Facebook, WhatsApp, and Spotify. So who are we? We're the Miles, me and my wife and our 2 boys there. We have one that just graduated high school. He's usually on here helping us, but he's a YouTuber and has a pretty big interview with a really big YouTuber tonight where he's interviewing him for his channel. And so he's pretty excited about that. It signs me out of this about this time every week, so bear with me for a second. But he is just graduated high school, and then our other one is going into high school this next year. So my wife and I, we've run a commercial construction company for the last 20 years. We started investing ourselves about 10 years ago. Through that process, we ran into some real shysters that were in the finance brokering space. And we didn't like the way we were being treated, didn't like, we had, you guys wouldn't believe the amount of fees some of them were trying to charge us. And through that process, I told my wife about 4 years ago, or I told her probably 7 years ago, hey, I think that we could do that business of brokering loans and helping real estate investors. And, we don't have to charge, these crazy fees that these other people are charging. So we could charge fees like a residential mortgage broker and make a good living doing it. And be a service to the community. And so 4 years ago, we started this business, and it's had its challenges. A couple, I guess about a month after we started, COVID hit. And then, not too long after that, we had a 1.5 year break there. But then after that, now we have the interest rates kicking up. So we'll talk a little bit more about that as we go. But who are you? If you want to, you can raise your digital hand. I'll call on you, and probably got time for 2 of you to tell us a little bit about who you are and what you do and things. And before we get into that, I'll tell you that we have had people that have met each other on this call that have done business together. We have a contractor friend that goes to church with us. He's done, rehabbed a 12-unit apartment building for someone that he met on this call, and they wouldn't have met if it wasn't for this call. So make sure that you put your information in the chat. If you're a contractor, tell people. Even if you're a lender, step on our toes and tell people. Make yourself known. If you're a buyer, tell us where you're buying, what you're buying. Maybe if you're buying in Southwest Florida, tell us that. Just let us know a little bit about yourself in the chat. So if anybody wants to introduce themselves, go ahead and raise your digital hand. Yeah, go ahead, Michael.
Thanks, Sherry. I appreciate it.
Yeah.
Hey, everybody, glad to be on here. My name is Michael. My wife and I are new syndicators. We are coming into this space looking to do multifamily, traditional value add play, C properties, looking in Northwest Arkansas, and only been in syndication about 3 months now, but own and operate a small portfolio of single family homes across the U.S. as Airbnbs. And I am a real estate agent here in California and Marine Corps veteran. So would love to connect with anybody. Thank you.
Awesome. Great to have you here, Michael.
Glad to have you, Michael.
And that's a good market, that Northwest Arkansas. There's a lot of stuff happening there. And Jason, I see Jason. I hadn't seen you in a while, man. How's it going? I can't hear you. Unmute yourself.
Say anything, but I've been on vacation, so kind of enjoying and ready for the second half of the year. Semper Fi to our local Devil Dog here. I'm in Riverside, so I'm looking outside as well. So if you can, I'm driving, but throw your information. Love to connect with you offline. Been networking with Jerry for the last 2.5 years, and one of these days we're going to get our first deal closed. So yeah, let's connect, Michael. Appreciate it.
Yeah, I'll say Jason has been working hard at it for a while and looking for the right deal. The market's tough right now, to find a deal within the multifamily space. But me and Jason met. We're both in Grant Cardone's real estate club. And I just signed up for my 3rd year of the real estate club, Jason. So at the last Bring Your Deal workshop.
That's cool. I actually just last week passed my real estate exam for the state, and so that now puts me circling my business plan, as I've talked to you before. So
yeah,
I can write off all those expenses and start spending money.
Awesome, man. Well, good to have you on here. Good to see you.
Good to see you.
All right. So we'll go ahead and jump into the current debt market. Um, in a lot of ways, we had that big rate jump. We went 5 points, five percentage points, in a year's time, to curb inflation or whatever it is that they're trying to do. A lot of people have their own opinions on what the Fed's trying to do and what, all the market and everything. But they put us to the highest federal funds rate in 22 years. We're at 5.25 to 5.5. What we look at on our long-term debt, we're looking at the 10-year and 5-year, 7-year, the treasuries. So you can, if you ever want to see the treasuries, go to, MSM or CNBC or Bloomberg.com, any of those. If you just do a Google search, type in, 10-year treasury. First thing that pops up is CNBC, and you can find out what the treasury is. So if you're looking at 10-year debt on a property, and right now the 10-year treasury's at 4.25. If your loan amount is going to be, 7 million plus, you're in the conventional rate. You're in the conventional rate space. You're going to be like 1.5 to 2 above the 10-year treasury as your final rates, or above the 5-year, depending on what term length you're wanting on your loan. If you're looking at loans that are smaller than that 7 million range, you're going to be in what they call the small balance loan space. And instead of adding 1.5 to 2, you'll be adding 2 to probably 2.5 to the treasuries for your final rate. So the smaller properties get a little bit, of a bump in rate. And all the rates and things, all the, the different levels of rates, a lot of that's just based on historical figures on what has been foreclosed on the most, and what, those types of things. So if you're I'll go to the next page and we'll talk about that a little bit. But yeah, the treasury rates determine the rates we pay on long-term debt. If we're looking at short-term debt like bridge loans and things like that, we're going to be looking at either the Bank of America rate, which I think is like 8.5 right now, or they'll be looking at sometimes they'll look at SOFR, and you'll be like 4 or 5 points over SOFR. They have different things they base depending on where the lenders are getting their money from. So this is a big week for finance in the finance space. We have CPI, which is reporting tomorrow. If you guys are following that, the consumer price index is what they're basing, what the Fed's going to do. They're basing it on this is our inflation numbers coming out in the morning. Sometime between 7 and 8 o'clock in the morning, they're going to be reporting the numbers, and the Fed will probably come out and speak tomorrow afternoon, and they'll make some kind of statement on what they think they're going to do. Jerome Powell spoke on the Capitol Hill today. If anybody watched that, it's never fun watching the politicians grill somebody, because you got one side that likes them and one side that doesn't, and it's always a show. But some of the things that he said today, we were at like an 80% chance of rate cuts. I think it was 80-something% chance of a rate cut coming in September. And after his speech and things he did today on Capitol Hill, it's dropped to like 60-something% because of some of the things he said. So who knows what's going to happen? They might keep prolonging it. But even if we do have a rate cut, they're looking at cutting 0.25%. 0.25% isn't going to do a whole lot in the grand scheme of things, when we're looking at, the pain and things that the market's in right now. So, oh, I see you changed these today. Cool.
Yeah, those are updated ones.
Nice. So this is, if you're looking at Freddie Mac's small balance loans, this is an updated rate sheet. Small balance on the Freddie Mac side is 2 million to 7.5 million loan amount. If you go above that, 7.5 million, get to the conventional rates, you can drop these rates probably another quarter to a half in some cases, but definitely a quarter. So things that determine the rates, are they're gonna get a little better rate if you're in a nice market, if you're in a good market with a good tenant base, if you have a lot of employment options, those types of things. If you if you don't have really high crime, you'll get better rates in things if you have below market rents. If your average rent is below market, then you'll get better rates. Those are the types of things that will help you on the rates. If you're in a rural area, you can be on the higher end of the interest rates, or an area that has maybe one or two employers in an area, that kind of hurts rates as well. So here's the Fannie Mae. This is 2 million to 6 million. We can go on the Fannie and Freddie side as low as $1 million, but your rates are going to be bumped up another half point to a point if we get to that 1 to 2 million range. So just fair warning on that. And that's not purchase price, that's loan amount. So I will say on those smaller loan amounts, I do have a private lender that is giving some really aggressive terms and things out right now. We had one quoted at like 6 3/4 for a $900,000 loan on a 24 unit the other day. And that was about the best I've seen from a private lender in a long time. So we've been in a stagnant market over the last year and a half to 2 years, because of the rate hikes. It's starting to break free, and the thing that has to break, we're seeing deals all the time. And I'll kind of go into this. Our bridge lenders are the ones that are hurting the most. Out of all the bridge lenders and private money lenders that we use, probably half of them over the last 2 years have quit writing new business. And the reason for that is they don't have money to lend right now. If they lent money out the last, let's say 3 years ago, 4 years ago, those loans came due last year or the year before in this higher rate environment, and they can't refinance out of those loans because they owe more than what they can refinance them for. And so there's a whole mess of business out there that just cannot, they don't really have an option. They might have, and I'll just use this as an example. I use this one all the time, but it's an example of kind of what we have seen reoccurring over and over and over. But this one, it was a hotel that there was a bunch of hotels. I'm thinking of more and more of them. We got one guy that owns 4 hotels, and we've been trying to refi these hotels, and he's trying to get his income up, but you can only push income, you can only push the income so much on these hotels and things. But he's got 4 hotels all under bridge loans, and every one of them, any of the 4, he owes more on the bridge than what we can refinance it out for. If he was to refinance all of them, he would need to bring about $4 million to the table to be able to close loans on these 4 hotels. And they're all smaller hotels, $1 to $3 million in value. But nice little, I guess boutique hotels. But one in particular that I think about all the time is this guy. He owes $8 million on a hotel in out west. I'll just say out west. He bought it for $12 million 3.5, 4 years ago. Got an $8 million bridge loan. Did a bunch of work to the place. So he had investors. He syndicated the deal, brought $4 million in of investors' money, and then used $4 million or $8 million in debt, from a bridge lender to buy the place. Well, now as he's trying to refinance because of the higher rates, and also because hotels just aren't making as much as they were, 3 years ago, or 4 years ago, he's now the most that we can get him on a refinance is $5 million. And so if he was to turn around and sell this hotel today, the most he would get out of it is 7.5 to 8.5 million. So all that money that he raised on his syndication is just gone away overnight. It's gone away as the rates went up. So he's got, probably aunts and uncles and high school buddies and college buddies and all that invested money with him, and then friends of these people, and just on down the line. If he was to sell the place, or if the lender gets tired of renewing his loan or extending his loan, he's going to lose $4 million in investors' money. And that's the shape that everybody that bought, in this bridge loan, with these bridge loans and things several years ago, when the rates kicked up, they're the ones hurting the most, because their money's just sitting there in these deals and there's no way out for them right now. And they're all just hoping that, they're all hoping and praying that the rates come down. And, they were hoping that last year and they haven't come down yet. So that's what's coming to the market. A lot of deals like that, where lenders are going to start saying, no, we're not going to extend it. We're going to force a sale. And when they force that sale, it's going to allow people that are buying to get good deals. But then it's also going to hurt the people that are selling and all their investors. So if you think raising money for deals is hard now, wait until these news stories of all these people losing their retirement money and things in these apartment deals and hotel deals start hitting the news cycle, and CNN runs specials on it, and Fox News is running whole shows on it. It'll get real hard to raise money when that happens. So be good at what you do is what I'll say. But there is a lot of opportunity coming to the market. There's a major correction happening for the people, and the people that are going to benefit are the ones that can raise the money to buy these deals.
I've got a question.
Yeah.
Liana has a question. She said, do you think there will be an increase in short sales on multifamily?
There's going to be an increase in people being forced to sell from the lending institutions. And they're going to say, hey, sell it by this date, or we're going to take it over. So I think that's the way it's going to be. And it'll be just pretty much handing the keys back over to the banks. And the banks are then going to turn and try to sell them if they can't sell them themselves. Because I've seen some issues, I've seen some where people bring deals to us, they're trying to buy deals, and they're trying to buy the deal for what the debt payoff is. And the deals still don't work. It's like they're buying a deal, and it's, 50% loan to value, just paying off the debt, and it, they're, people, the banks, some of the banks are going to lose on some of these deals, but there's 2.7 trillion, maturing by 2027, $500 billion this year, $500 billion next year. But these numbers will actually be higher because of the people that have been on extensions and things over the last couple of years. So, all right. So getting to the main topic, understanding DSCR. First thing, we're going to talk about what is DSCR. I know there's probably some new people on here that don't understand all the terms and things yet. But DSCR is debt service coverage ratio. It is the ratio or the formula that banks use to measure cash flow's ability to pay debt obligations for commercial properties. So in comparison to residential real estate, residential real estate uses debt to income, and that's your personal income minus all your debts. They want to see a certain percentage there to be able to come up with how much you can afford on a mortgage. Same idea with commercial real estate, or even buying a business, but they want to see that business of the property, the money that it brings in, is going to make the get to the ratio that they're looking for. So how to find the DSCR? So you're going to take the yearly net operating income divided by the yearly debt service or mortgage payment. And so to back it up even a step further, NOI is net operating income, And that is all of the income from the property minus all of the reoccurring expenses. So if it's a reoccurring expense, you take it out. If you do a roof, or you have to paint a building or something like that, or put a new AC in, those things are capital expenses. Those wouldn't be taken out on this at, you know, during this part of figuring of the money. So, but you take your NOI, which is all of your income after your expenses, divided by the debt service or the mortgage payment. So DSCR equals NOI divided by debt service. So how to find your DSCR? You know, you'll see, and I'll take it back up here. You can see that they have the DSCR listed on the loans page. You know, 1.2 might be what they're, you know, asking for on certain loan products or certain properties, you know, to a 1.4, even sometimes a 1.5. And I'll show you how those work here. So I see you messing with, oh, you're trying to fix the.
Yeah, it looks a little messed up. I'm sorry, I didn't fix it.
Oh, okay, that's all right. So your net operating income. So if your yearly net operating income is 15,000 or 150 or even 1.5 million, and your debt service to that is 12,000 or 120,000 or 1.2 million, you divide those. You're going to come up with 1.25, which would be your DSCR. A 1.25 DSCR is kind of your baseline DSCR on long-term debt.
Is that better?
Yeah, that's perfect. So as you're looking at deals, you know, you want to hit that 1.25 as a minimum. A lot of times, if you're newer, you know, they're going to make you maybe have a 1.35, or if the property's got a higher crime rate in the area, they're going to make it a 1.3 or a 1.4. A lot of different things. Or if it's a military town, you know, they're going to, and you have a higher percentage of military tenants, they're going to require a higher debt service if they lend on it at all. Just all these things that make the property with the greater chance of, you know, not being able to cover their debt service, they're going to require a higher debt service coverage ratio.
I hope this little formula helps. I try to make it simple.
Yeah. No, this is perfect. And so we're talking about DSCR, and a lot of times you'll hear people say a DSCR loan. A DSCR loan is a actual loan product now that, you know, people use on a like a 1 to 4 unit property. You know, instead of using you know, your personal name and things like that, you know, these debt service DSCR loans are made to help you borrow on, you know, single family rentals, you know, 4 families, you know, sometimes up to 9 units. And I'll kind of talk about those now. But when you hear the word DSCR loan, a lot of times this is what people are talking about. But understand, a lot of people that, you know, use these DSCR loans on the singles and quads and things like that, they don't understand that DSCR, you know, and I know that because I talk to a lot of them, that DSCR is something that you use in all commercial real estate. So that's why I'm kind of explaining it this way. So what is a DSCR loan? Right now, DSCR loans, we can still get, you know, really good rates and things. I mean, right now the DSCR loans are comparable, you know, to what you would get on a home mortgage, which hasn't always been that way. So we can get you down in this high 6s to low 8s on DSCR loans for investment real estate, which is kind of unheard of as far as what historically has happened. So, you know, 1 to 4 units up to 9 units with certain lenders. You know, these are all non-owner occupied properties. They have to close in an LLC. Simple underwriting process. You know, sometimes with the DSCR loans, we can go to a negative DSCR on these. If it's a nice property, You know, I'm talking bigger cities, you know, nice areas. Obviously, at this point, you know, you got to have a borrower that is really strong, but we can sometimes get to a negative DSCR and still lend on it. So example of how to underwrite what the DSCR is for a DSCR loan and how they figure it is they're just going to take the total yearly income from the property. So, and then they're going to take the annual taxes and insurance and the debt payments and subtract that from the yearly income. And then they're going to, you know, figure your DSCR on that. Really simple. They're not going to charge, they're not going to be looking at what your, you know, lawn care fees are, maintenance, or anything like that. That's as simple as it gets. Yearly income minus annual taxes and insurance and minus debt payments. So that is that. Did you want to go into the credit stuff today?
No, I'm not gonna go into the credit stuff. What do we have there today? I didn't pull it, did I?
It's on here, but it's I can skip past it.
You
So,
can skip past right before the Q&A. And if you want to know how to raise your credit score, go to Graham Stephan on YouTube. Graham Stephan 5 ways to instantly boost your credit score. And he will show you, he will teach you how to do that in about 15 minutes.
Yeah,
And somebody had a question. Go ahead.
Yeah, I'll talk just a second. A lot of people, you know, when you look at the gurus and things on YouTube and all these different, you know, big names that you see in the real estate investing space, you'll hear a lot of them say, I'll show you how to buy real estate with no credit, no money, all these things. Well, somebody, when you're buying a deal, has to have the credit, and somebody has to have the money. So if you want to be the person that's in charge, the person that has the credit and has the money, you know, what's the golden rule? The one who has the gold makes the rules. So the one that has the money on the deal, that has the credit, that's signing on the debt, that's the one making the rules on the deal. So if you want to be that person, you know, work on building your credit and building your personal stuff up. So I'll just say that real quick.
Yeah, it's not too hard. That's a 15-minute video from Graham Stephan. Just go ahead and look at that, and it'll give you some tips and ideas on how to easily do it. Somebody had a question: how much cash to close with a DSCR loan?
You know, we can go to 80% loan to value as long as the DSCR works out. So, I mean, on a $100,000 house, you know, there's not many of those out there anymore, but on a $100,000 house, you know, if you have 20,000 for, you know, your down payment, you'll need closing costs as well, probably another 6,000. And then you're going to have, you know, they're going to want to see some money in the bank. So I would say 30 grand to 35,000 in cash to be able to close a $100,000 loan, because they're going to see some reserves in your bank once you close. So the bank never likes to see you drain your whole savings to buy a house or buy a property, and be left with nothing. They like to see some money left, so you can, you know, because things happen. So, but I'll open up to question and answer. Anybody has any questions, go ahead and raise your digital hand, but I'll keep going through slides because we got quite a few more of them to go. Needed for a quote. If you would like us to quote a deal or help you with a deal. This is for multifamily, you know, any type of commercial real estate. These are the things that we'll need. A T12 or a profit and loss, you know, written in a trailing 12 is what we need. A rent roll and OM is helpful because it gives us address and information on the property that rent rolls and T12s usually don't have. Also, when you send these things, give me a summary of what you're thinking on the property. You know, sometimes I'll get things from people sometimes, and I'll get a T12 and a rent roll and says, hey, give me a quote on this, thanks. And the rent roll T12 don't have an address. I don't know where it's at. You know, I don't know, from the address, and I don't know what they're planning is what they would plan to offer on the property. I don't know anything, a lot of times when they send it like that. So a summary of what you plan to do. Well, tell me, the broker is saying that, the buyer wants to get 14 and I'm thinking I'm going to be closer to 12 or whatever it is, and just kind of give me a good overview of what you're thinking when you send it over. An SREO and a PFS we will need before, we would sign an LOI with the borrower. SREO is schedule of real estate owned, and then a personal financial statement. To be able to buy real estate, bigger properties, if it's not a DSCR loan, like the actual lending product DSCR, to be able to buy a property, you're going to need to have a net worth equal to or greater than the loan amount to be able to sign on the debt on these deals. So being able to show a schedule of real estate owned and a personal financial statement that shows some experience and also shows the net worth requirements to buy is what you'll need to be able to buy commercial real estate. If you don't have those things, there's probably a few people on the call that do have those things. Put your information out there and reach out to people that you've seen on the call, because you need to network with people that can buy deals if you want to buy deals and you don't have those things in line.
Yeah, we're not just doing this Zoom for education. We're doing this Zoom so you guys can connect with each other and relationship as well. I don't know if you have your chat up, but there's a couple messages on there for you.
Okay, let me see here. Okay. What's your schedule like tomorrow? I have time tomorrow morning and interested in a fourplex and 24 unit I'm looking at. That's Jason. Jason, I'm going to be at the real estate summit in Miami on Monday and Tuesday. And the family and myself, we're going down to Naples. We're traveling tomorrow. I'm going to spend a few days in Naples before the event. So you can call me tomorrow. I will be traveling, but you can call me and we can chat. And do you do SBL for 8 units, 1.5 million, maybe under 1 million loan if 60 or 65%? We can fund it. It would not be an SBL or it wouldn't be through agency, but that loan amount doesn't throw it off. We could fund it. We have several lenders that would fund that deal, private lenders. So send me your profit and loss and those types of things on that deal, and I'd love to take a look at it. I'll have my email up here, Barbara, in just a few minutes. And then Lisa, what kind of turn times do you estimate? Lisa, are we talking about now, when we're talking about turn times, are we talking about to get a quote to you? Or are we talking about being able to close a deal? What is it exactly that you're looking for? So you can, speak up and talk if you want. You don't have to raise your hand, Lisa. But go ahead and let me know those things. Now, if it pops up in the chat, let me know, because I need to see the screen here. Needed for a quote on a DSCR loan. If you're wanting a DSCR loan, 1 to 10 units, and Barbara, you can kind of send me this information on yours as well, and I'll be able to let you know what we can do on it. The one that you were talking about, I think we could do DSCR style on the 8 unit. But address.
She said, sorry, her connection is slow. But if you want to type it out, you can, and I can read it to him.
Yeah, that'll be fine. So we need address, If it's a purchase, we need what your purchase price is going to be. If it's a refinance, let us know what the purchase price was, date purchased, and what your current value is. Monthly rent, taxes and insurance, and also the borrower's credit score. That is what we will need to be able to quote one of these for you. These are a simple process, quick and easy close. So we'd love to help you with those. What can you do today? Let's say you're a new investor or you're just getting started, whatever. What can you do today to start getting yourself ready if you're wanting to syndicate to be the KP, what they call a key principal that would sign on the debt with people? Right now, first thing, start making sure that your credit's in order. You can do a lot with your credit in a short time. Work on your PFS and SREO, so your personal financial statements. Start writing down all of your assets and all your liabilities, and make lines and work on getting the liabilities down and the assets up. Get your bio together. You're on this call right now. This is some part of education. Start naming off all the education you're doing and things like that. Work on raising capital. So start talking to people that have money and would like to put money into your real estate deals, or find a way to make more money. A lot of ways out there to start side businesses and little side hustles to make more money. And one way is we have a referral program. We haven't done a call on our referral program in a while, but if you refer business to us, we will pay referral fees. We have a few deals in the works where guys are going to get checks if we can get the deals closed, where we have referral partners that'll get checks, 5-digit checks. We have a few in the works that and one guy in particular, it's got a few deals that he's referred to us that he'll get some 6-figure checks if these deals close. So it's could be real good. You refer the right people to us, and we can help them get deals closed. So the week's verse, our verse of the week, Matthew 25:20. So he who had received 5 talents came and brought 5 other talents, saying, Lord, you delivered me 5 talents. Look, I've gained 5 more talents besides them. And then Jesus goes on to tell him, well done, good job. And here's 10 more, and I give you all these kingdoms to manage because you've been so good with what I've given you. So if you're a business person, even if you're not a Christian or a Bible reader, this is a story about business right here, because they went with the guy with the 1 talent, and he went and hid his talent, under a rock because he was afraid somebody would take it. And then he gave that 1 talent back, and the other 2 guys got 5 and 10 talents, or 2 and 5, and they doubled them and made money on them. And he said, "Good job, guys." And the guy with the 1, they took everything away from him and said, "You can't even put the money in the bank to gain interest. What's wrong with you?" So. Use your money and make your money work is the moral of that story. So, and our next Zoom topic, July 24th at 8 p.m. What are sellers waiting for is what we'll be talking about. We'll go over the current debt market again, and then we'll be talking about what are sellers waiting for. Here is a link for the WhatsApp group. If you scan the QR code there, there's some big people in the chat, in that WhatsApp chat. So if you find deals, there's people in that chat I know personally that can sign on $20 and $30 million in debt. So if you're wanting to have people to share your deals with that can help you get deals closed, there's people in this chat that can do it. So. Our contact information is here. That's my and Shelly's email addresses. That is a link to my Hi Hello card. And then you can share your information with me as well through that. And then that is my cell phone number. So I answer my cell phone almost to a fault. I'm always answering my cell phone. So feel free to reach out. What's that?
I said, yep, he does. Yeah, he does. If he doesn't answer it, he will get back to you as soon as he can.
Leave me a
Scan that
message.
QR code there. You'll get all of his information. You'll also get to create your own new digital business card, which is kind of cool, for free. So I also shared your information in the chat. Go ahead and click that. He's on Instagram as well.
Yep. Instagram as Jerry Sells Money.
And we got a few more minutes if you guys have
Put the
any more
WhatsApp,
questions.
keep it the WhatsApp QR code up
Yes,
again.
there it is. And so make sure once you join these, keep an eye out for the other calls. Mondays and Wednesdays we do calls. And so it's a lot of new faces here. Good to see all the new faces. And if you guys don't mind, why don't you all, if you can and you're able to type, let us know in the chat where you saw this call so we can know where everybody came from and where they linked up with us at. That'd be a big help to us.
Oh, you're asking, I didn't hear all of it. Okay, you're asking where they found us from. Okay.
Yeah, where they
email.
heard about this call today.
Yeah, because we shared a lot of places. Girl by Facebook,
Awesome.
Freedom Chasers.
Freedom Chasers Facebook, Freedom Chasers
Right.
WhatsApp, email. Okay, cool.
Nice.
Very, very cool.
Nice.
Already part of
MFC.
this.
Hey, glad to have everybody.
Yep.
Glad to see new faces. Glad to see the older faces.
Yep.
Hope we were able to add some value to you guys.
For sure. And
Oh, an underwriting call with Ed and Kevin.
awesome.
Facebook event. Yay. Awesome. Well, thank you guys for being here. If you guys have no more questions,
Yep.
we'll head out.
And we will
And I
be,
will
before you play the music, I'm going to be at the Grant Cardone Real Estate Summit Monday and Tuesday. So if anybody is going to be there, it'll be in Miami, Florida, Monday and Tuesday. If you see me, come and say hey.
Okay.
I will be
I
there.
definitely will.
Okay, you're going to be there? Awesome.
Yes.
Awesome.
Yay.
Yeah.
Thank you for this information.
Yeah, for sure. It's good to see everybody on here, and I look forward to meeting you down there in Miami.
Michael, it was good meeting you.
Yeah.
There was somebody else on here.
You as well. Thank you guys both.
Yeah, for sure.
Awesome. All right, guys. Bye. Have a good
Bye.
night and weekend. I will leave you guys with some music if I can find it. Oh, you're sharing screen. That's why. I gotta take over. Here we go. Bye, guys.
When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. Rule one, getting money, never losing no. But I'm broke, but now I'm living adding digits, counting zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested though when I let it grow. Benjamins, I got a pocket full. Rich income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my Dr. Down. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the checks. I buy apartments, I send checks. Young billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. When I walk through the door, I'm talking cash flow.
stupid. How stupid can you go? You can go as stupid